Everyone is talking about AI stocks right now. Nvidia, Microsoft, Google, OpenAI. The headlines say this is the place to be. Dangerous traps in modern financial history. In this video, I'm going to show you exactly how this and if you invest without understanding it, you could be walking straight into one of the most dangerous. You could be walking into one of the most treacherous traps. The biggest investment opportunity of our generation. But here's what those headlines aren't telling you. Smart money is actually doing right now. Stay with me. This is important. Trick works to have, with real numbers, real companies, and real consequences. And by the end, you'll know what. There's a financial trick happening behind the scenes. One that has created the illusion of explosive growth.
Let me ask you something. If I lent you $100 pagas, and then you immediately used that $100 to buy something from me Capinio, Pito, did I actually make a sale? Or did I just move money in a circle? And that's exactly what's happening in the AI industry right now. And I think it has a name. It's called circular financing. Here's how it works in the real world. Nvidia, the company that makes the chips powering almost every AI system on the planet, Apudo, invested roughly $1 billion into more than 50 AI startups in 2024 alone. Then those startups used that money to buy more Nvidia chips. Microsoft and Amazon invested billions into OpenAI. OpenAI then signed a $300 billion cloud deal with Oracle Times, whose infrastructure runs on chips supplied by Nvidia and AMD. AMD gave OpenAI warrants, Turilage, essentially the right to buy AMD stock at a discount moment, and OpenAI committed to powering its operations with AMD chips. Do you see the pattern? The same money keeps cycling through the same small group of companies. Each deal makes the next pool. Companies' revenue look bigger, each company's stock price goes up, and investors, people like you and Ty, me calm, see those numbers and think, this industry is exploding, but is it really growing? Or is it just money moving in a very expensive circle? Let me give you the real numbers. AI captured nearly 50% of all global startup funding in 2025. That's the first time in history that a single technology sector has claimed a majority share of global venture capital. Sounds incredible, right? But look at the other side of the equation. Amazon, Google, Meta, and Microsoft, the four biggest. AI spenders pro-spent have seen their combined free cash flow shrink by an estimated 43%. Between late 2024 and early 2026, they're spending far more than they're generating. OpenAI, the war company at the center of all of this, had projected revenues of around $13 billion in 2025, but it has already signed infrastructure commitments worth hundreds of billions of dollars, $300 billion with Oracle, $90 billion with AMD, $38 billion with Amazon Web Services alone. According to research firm Bain & Company, AI companies will need $2 trillion in annual revenue just to justify the infrastructure being built right now. $2 trillion per year. That revenue doesn't exist yet, so what's holding this whole structure up, investor? Confidence, headlines, and the belief that the growth is real. Analysts at Inside Pofkeshrin, one of the world's top business schools, Palame, have compared these financing structures directly to the vendor financing arrangements that characterized the late-stage dot-com bubble, just before it collapsed in 2000. This isn't the first time we've been here. In the late 1990s, the internet was gonna change everything, and it did tattle. eventually, but before that, there was a pitting bubble. Companies with no real revenue, no real customers, and no real business model were valued at billions of dollars. Why? Because investors believed the growth was coming. In March 2000, the Nasdaq crashed. Over the next 2 years, it lost nearly 80% of its value. Trillions of dollars in wealth evaporated. Millions of investors were wiped out. The internet was real. The technology was real, but the valuations were not. Here's what makes. Outside the industry, today, a significant portion of AI revenue comes from AI companies paying. Today's situation, even more concerning. Back then, companies were at least pretending to have customers. Other AI companies, one expert described it simply: the distinction between a flywheel and a house of cards comes down to one thing: attaching. Whether real end-user demand is being generated, or whether money is simply moving in circles, that question hasn't been answered yet. Now, TikTab. Before you walk away thinking I'm saying AI is a scam, parascam, I want to be very clear. AI is real, the technology is real, and some companies are going to create enormous wealth from it. The question isn't whether AI will matter. The question is, which investments are real and which ones are inflated by circular money? Smart investors right now are doing two things. First one, they're separating the infrastructure layer from the hype layer, the companies building the actual picks and shovels paddles, the chips, the data centers, the foundational models predistores, have a different risk profile than the startups burning cash, and on top of them, second tearing, they're diversifying outside the AI bubble entirely. When a bubble pops, every asset inside it gets hit. The smart move is to hold positions in assets that move independently. That's why a growing number of sophisticated investors are quietly repositioning into crypto, in HEFs, not as speculation, but as a strategic hedge against a tech sector correction. Crypto has its own volatility, but it doesn't move in lockstep with AI stocks. And unlike the circular financing of big tech, the blockchain is transparent. You can see exactly where the money is and where it's going. Now, understanding these concepts is one thing, but actually knowing how to read the market, identify real signals, and time your entries correctly, that's a completely different skill if you want a systematic, but step-by-step framework for navigating crypto markets, built specifically for people who don't want to rely on hype or guesswork. I've linked a resource in the description below, and it's called Crypto Quantum Leap. It's one of the most structured crypto education programs available right now. It walks you through exactly how to analyze market conditions, manage risk, and position yourself before the moves happen, not after. I'll leave the link in the description. Take a look and see if it's the right fit for you. In the next video in this series, I'm going to break down exactly how the circular money machine works, step by step, and show you which specific companies are at the center of it. If you found this valuable, subscribe and hit the bell icon. And this series is going to go deep, and I'll see you in the next one.